Good morning. My name is Jane Morgan. I am the Investor and Media Relations Manager, and thank you for joining me today for the Hubify Limited Investor Webinar. The company yesterday announced that it had finalised the acquisition of two businesses in the telco managed services space, which are both earnings accretive and complementary to the Hubify's existing organic business. To tell us more about the release, I will hand you over to our CEO, Victor Sakunis.
Good morning, Jane, and good morning, everyone. Yes, we're very pleased to be announcing these two acquisitions. As Jane said, they're both complementary to our existing organic business and both earnings accretive. So, firstly, I'll go through, before we go into some questions, I'll just go through each of them in some detail. So IC&E are a cloud and managed service provider. And they've been doing that for 20 years. John Martin, the CEO, founded that business, and we've been working with that business, in a partner with model over the last year or so. So it's been going really well. And what they will do for Hubify is they'll enable Hubify to be a complete end-to-end IT and managed service business. And as far as the numbers go, forecasted to contribute 600,000 in EBITDA in FY22. We acquired that business at a good multiple for those type businesses of 3.3 times annual EBITDA, and we're doing that as 50% cash and 50% scrip. And John and the team will remain as part of the business, to continue that organic growth and really as an anchor for Hubify in this managed service space. The second acquisition is Smile Telemarketing. They're an outsourced lead supplier. This business has 75,000 business records, profile business records. So understanding a lot about each prospect and each business in Australia. So they've got 75,000 of those records that are a great asset to our business moving forward. The IP and technology is in their business is more advanced than what we had in our own internal call center and lead generation operation. We're expecting 500,000 in EBITDA in FY22 post synergies with that business, and we're paying 1 times earnings, and that's a 100% earnout. So, and that's at 50% cash and 50% scrip. So that'll play out over the next 12 months, and the shareholders of Smile will be paid at the end of the 12-month period. And again, in that business, we're retaining the management and the team. So with both businesses, a lot different to the acquisitions we've done in the past, where we're retaining the teams, whereas in the past we've been buying just databases. So it's an exciting time for the business and really good for those businesses to be coming on board and adding value to Hubify. Jane, I might hand over some questions to you now.
Perfect. Well, we had a few that come through over email. So can you firstly run through the acquisition of the managed services business? I understand this is an area that the company's been looking to expand into for some time. So can you run us through the strategic rationale for the acquisition and the past future growth profile of the business?
Yeah, well, it's a very strategic acquisition, the IC&E acquisition. Firstly, we always plan to broaden our products and services range, and our objective is to have a larger share of wallet with each of those SMB customers. And this is that's paramount to our strategy. And this is the anchor managed service that we've been talking to in the market that we've been looking to acquire. We've partnered with a number of businesses in the past, and we're really pleased to have them on board. As I said, it broadens our product set and allows us to provide a full service telco and managed service offering to the expanded customer base. So IC&E's growth over the last few years has been modest, but we see a significant opportunity to cross-sell their services, all cloud migration and all that full range of services, to our 7,500 customers. We're definitely expecting double-digit growth over the next 12 months out of that business. Just talking about the revenue a little bit, 40% of the revenue is truly recurring, where customers are paying on a subscription basis, on a month-to-month basis. in contract. But the remaining 60% is what we call, a lot of it's what we call repeatable revenue, which is repeat orders that occur every year from customers. So it's important to note that of that 60% repeatable revenue, 75% of that is coming from existing customers, so existing ICNE customers. So when you look at what's actually truly recurring and what's actually going to continue coming through as recurring revenue, we're talking at more like 85% of the revenue. The business has over 100 customers. Some of those are high profile customers, one of which has recently detailed an aggressive rollout, with a campaign of new stores there in retail, and that rollout supports the growth potential that we're anticipating from the business moving forward.
This question is actually just from the same attendee. So on to the second question, Smile. Can you run us through the same questions as ICNE?
Yeah, sure. Well, Smile has been, we've been a customer of Smile for the last 8 years. So whilst being supplied leads, we've also had our own telephone-based lead generation business or team within the company. And this acquisition's about consolidation with the merging of both those call centres. And what it does is it improves efficiency, it lowers our cost of acquisition, and it provides immediate synergies. So, and also as an outsourced lead supplier to tier 1 telco, Smile has a strong order pipeline, and that underpins our confidence in future growth estimates. The current pipeline for FY22, and that's excluding any orders that we have in place for Smile. It already covers the FY21 sales number. So for Smile, so the acquisition gives us profile data records of 75,000 businesses across Australia. Really helps us pull together that sales pipeline, and go out and spend time talking to the right customers and get efficiencies through that.
Vic, this has been a key point for most attendees, so I've tried to pull it all together. But can you provide some colour on the future acquisition pipeline and an update on the Internet 2.0 investment that you made a few months ago?
Yeah, sure. Well, I mean, firstly, look, we're pleased with both these acquisitions. We've acquired these businesses at a blended multiple of 2.27 times. Their earnings are accretive. They've got many strategic benefits for Hubify's long-term strategy. Right now we still have circa 4.5 million in cash in the bank post-acquisitions and no debt. So we're in a great position to continue pursuing that acquisition pipeline. We're actively pursuing a number of acquisition targets in this same space. The pipeline sits around the 25 million mark of acquirable revenue at the moment, and we're looking forward to updating the market soon as more opportunities materialise. We're still also in a unique position where our peers, like 5G Networks, Spirit, Over the Wire, MNF, are well over the 100 million market cap mark. So they're not going to look to acquire the businesses that are in our acquisition pipeline. They just won't move the dial for them. So we're in that unique position where for a period we can continue, until we get to that level, we can continue acquiring those businesses. We recently announced the partnership and investment in Internet 2.0. The team are pulling together the marketing campaign right now so that we can press go on that on July 1. We're very excited about that. The whole team have been trained across the country by the Internet 2.0 team, and that's really exciting. The team are all really excited about that. The acquisitions. Both these acquisitions, when you look at call centre capability and lead generation, and you look at managed service, both of them are going to fuel the growth of that investment in Internet 2.0, and the overall Hubify business.
Thanks, Vic. So another question that's come through a few times. So can you touch on the organic growth in the Hubify business?
Okay, yeah. Well, we can't say too much heading into the full year result, but I can say that we've had solid growth in our voice and data business and our managed service business. We've been working through provisioning some larger contracts and adding to our recurring revenue. Recurring revenue is running at around 60% of total revenue on an annualized basis. Organic growth in both voice and data and managed service is in the strong double digits, and it's a key metric in how we track how we're building the business moving forward and growing our customer base. So double-digit growth in voice and data, double-digit growth in managed service. Like most businesses, we've faced a few slight COVID-related headwinds in some divisions and geographical areas, but overall, we're expecting a good result for FY21 and a strong performance in FY22.
Thank you. And so where do you see the company 2 years from now, and what are the major opportunities in telco to win market share?
Okay, I'll answer that in two parts. The first question, which is, I'll answer the second question first. The opportunity is really to be a single service provider. So there's a big opportunity in SMB to provide value-added services. The segments we're looking at where we see the opportunities are mid-tier retail chains, building and maintenance, professional services, where they have specific IT needs and basically and telco requirements where navigating through those for them can be difficult. So we're going to help them navigate through those strategies. In SMB, those companies are really not being serviced, and there's a great opportunity there. In the mid-market space, cyber is huge. We'll be leveraging our cyber assets and capability, to win in that space, and also leveraging 5G and IoT, which are big opportunities in Australia over the next 5 years. So back to the first question, which was, where do we see ourselves? Look, in 2 to 3 years, we see annual revenue sitting at over 50 million, and the company earnings accretive. During that time, we'll continue building the brand and personalising services to SMBs and clients, the Hubify way. And those numbers are without any further consolidation in the industry, which could see us easily, acquiring larger businesses, which will dial that revenue number up. But if we look at it organically, we're talking around, again, 50 million and, operating at that 12 to 15% margin rate.
Brilliant. Well, I think that actually covers everything. So thanks. The recording of the webinar will be posted on the company website. If we've missed any other questions, please feel free to reach out via the contact details on the bottom of our ASX releases. Thank you again.
Thanks, Jane. Thanks, everyone, for joining.